timely, insightful, discussion and analysis of economic trends and markets. From Southern California to Sacramento, featuring business and political leaders, unique field reports. From Orange County and the campus of Chapman University, this is the Chapman Business Report.
And welcome back to the Chapman Business Reports, our weekly look at business, financial markets, and a special focus on the regional economies of Southern California. I'm Pete Weitzner. I head up the television and broadcast journalism program here on the campus of Chapman University, a couple of blocks west at the Dodge College of Film and Media Arts, and joined as always by the good Dr. Essie, Adibi, the economist at the Anderson Center for Economic Forecasting and Research, housed at Beckman Hall, just about 100 yards behind us. Immediately behind us, that's the Global Citizens Plaza, dedicated a couple of years back by the General Colin Powell. Boss, we're going to focus this show, kind of a special show, in that we're going to look. No one's happy with what's going on in the economy, of course. We're here now around as the fall starts at about 1% growth for the year.
Yeah,
a little more than that nationally and internationally. There's very few economies other than, say, the BRICS countries that are growing it any better. So let's first look at what we have tried in the last 3 years in this country, what you think has worked and not, and then there's a lot of proposals out there. Specifics on, say, getting the housing market going, on getting capital spending, on taxes, and broader proposals. I want to get your take on all these proposals, what might be worth enacting, what might be worth just letting things play their course.
Yeah.
But let's start with what we've tried. What have we tried?
Okay, first,
give us a summary.
First, we call
we've
this...
Tried.
We've tried a lot. This is a great recession. There's no question. Since World War II, we had 11 recessions, 11 cycles.
This is the steepest.
This is the steepest one by every measurement, in terms of declining output, in terms of higher unemployment rate, loss of jobs, long-term, and the structural changes in the economy. So, economists typically say, you have two options. Just let it go. Let the prices collapse, and eventually entrepreneurs are going to pick up the pieces together and the economy is going to come back up. But the problem is nobody knows how long it's going to take. So what we did, we started with Mr. Bush, President Bush. If you remember, we gave everybody checks, 400 for every individual, 800 to families, total cost of about $160 billion. And then we went through...
means tested. It was not everybody, right?
But practically everybody, yeah. I mean, if you were dependent on somebody's tax form, then you didn't get it. Then we had the TARP program, which was basically $475 billion. We used that to bail out banks, the auto, the AIG, and some mortgage modification. Now, overall, economists says that was necessary, particularly bailing out of the banks.
And if I go back to the Bush rebates, I know that at least that quarter's growth as well.
Yeah, but it doesn't do. See, the problem is whenever you give people checks, I have nothing against it, by the way. I love to get all the checks, but
and better than the government having.
Exactly,
right? It's more efficient.
Exactly, but you don't know what they're going to do with it. Are they going to save it? Are they going to pay down debt? Are they
At
going to
that time, people were paying
take
down
a vacation? So we did not get as much of a bang for that 168 billion. Probably 50, 60, 70 billion dollars.
But TARP
was necessary. Most economists agree that we had to shore up the banking system. It's a market economy, it's capitalism. If your bank systems are not functioning well, you're going to be in trouble. We already are suffering because the banking system is not healthy, still.
And that was part of, some of that money went to the autos?
Some of that went to, almost 80 billion went to auto, 250...
Money well spent?
No. There, I think it was more or less waste of money because we gave them the money and then they declared bankruptcy rather than the other way around. And then mortgage modification with limited success.
But the taxpayers got paid back.
Not on auto bailout. On auto bailout, we have to wait a long time because if you look at like GM, their share has to be $53 for government to break even. So, but on banks, on the TARP program, which
Chrysler, we got paid back.
A little bit. Still, there was some, but on the banking system, the 250 billion, we got some money back, and we gave some stability to the banking system.
GM is doing well. Chrysler's doing better.
They're doing much better, but they could have handled it a little bit different. Of course, the special interests were very involved here. They wanted to avoid massive layoff, and basically auto industry,
So far, kind of no harm, no foul, and maybe a little more.
Let's go the next step. Then we got
We're
Obama.
$600 billion in.
No, Obama administration.
Right.
They came in with $787 billion of a stimulus. At the time, they asked us, private economists, is that a good idea or bad idea? I didn't like it. Not I mean, a stimulus is a stimulus, but that package wasn't a stimulus. I mean,
a lot of goodies, a lot of favors.
A lot of favors, a lot of transfer payments,
We're not
giving
a political
people
show,
money.
but he had a Democrat Congress and Senate, so he was.
Exactly.
They were going to get what they wanted.
Again, we don't want to just say Democrats. Republicans got something for their
They would
constituencies.
have probably done the same thing.
Exactly. So we got $200 billion of a stimulus money, which I call a stimulus, out of the 787, which is infrastructure.
Right.
And of course, they were saying we have lots of shovel-ready projects, which we did not have.
And you always say the bulk of it were transfer payments. What does it mean?
Transfer
Which you didn't like.
Yeah, transfer payments is when you extend unemployment insurance, or again give checks for food stamp. They give some money to state and local government.
Stave off teacher layoffs, stave off municipal.
By the way,
worker
don't
layoffs.
take me wrong. I mean, I sympathize with people who are out of job and wanted to get extended unemployment. But if you call something a stimulus, call it a stimulus. A stimulus is when you do infrastructure. That's when you have vendors and you get private sector involved. You give them the money to build the road, bridges, power plants.
Bang for the buck down the road.
You get quite a bit of bang for the money you spend, plus it's an investment for the country rather than money gone. You know, roads are getting better, bridges are getting better, power plants are getting better, and that's what they should have done. So now, this was the package of fiscal policy that we did. This was the Congress and Senate. On the other side, monetary policy, what did we do? Let's go through the list very quickly. We lowered the interest rates, obviously, for everybody. Banks, you know, 0.25% they can borrow, 0.25% annual basis.
Still.
And the side effect of that, obviously, what do you think? Consumers, savers. I mean, our CD rates went down, and obviously that really dented the spending. But the goal here is always the case: monetary policy, lower interest rate, stimulate consumption, which is tied to the credit, and stimulate what else? Investment. So that was their goal. Then they did 2 stages of quantitative easing.
To stimulate the stock market.
The stock market, which was
And that
basically,
worked.
the first one was necessary, which we call it quantitative easing
Sure,
1.
the Dow was at 6,500 at the start of 2009.
Yeah, and that helped. They pumped money because nobody was lending money. They should have done that. You know, after Washington Mutual, Lehman, you know, the credit market got frozen. So the Fed basically came in, became the last resort. It started lending money, whether it is mortgage-backed securities, auto loans, student loans, credit cards. But then they did another one in the middle of last year. They call it quantitative easing 2, another $600 billion of purchases of long-term treasury. That one I did not like, and the reason was it wasn't needed, I believe. It helped the stock market, but at the same time, it created a speculation in the commodity market. Gold prices started taking off, fear of inflation. Value of the dollar went down, again, fear of inflation. And at the same time, you know, we saw what happened to oil prices and other commodity prices. Nonetheless, it helped the stock market, you're right. Now we're at the stage that...
You left out a couple of things. You left out cash for clunkers.
Oh, yeah. Those were relatively
and
small.
mortgage mod program.
No, mortgage mod was part of the TARP.
Okay, about 150 billion?
Actually, no, 30.
30. That was only 30?
That was only 30 because
All right, we'll
because
come
they
back on
made it
next show. I'm
voluntary.
looking
Yeah,
at it.
we'll talk about that. But so when you look at fiscal policy and monetary policy, we have taken so many different actions to stimulate the economy. Now,
Trillions, all told.
trillions. Oh yeah, the
why we
Federal
have-
Reserve printed almost $2.3 trillion. You know. And you know, they're not depository institution. They're not like bank, you know, get your deposit or my deposit, but they have ability to print. The question is, after all of these are done and said, why the growth is so anemic? Now, there's big debate going on in academic economists that they say stimulus actually didn't help. All of that money that, you know, was spent.
Keynes is dead, they say.
Keynes is dead. I disagree. You know, some of that help the economy. There's no question. I mean, you can argue that, oh, okay, if government doesn't spend and we reduce spending, economy is going to do better. Short term, that helped us to do relatively good in 2010. And now we're in 2011, and suddenly we got some other external shocks are coming in. Europe problem, Japan's earthquake, oil prices, our budget deficit and debt, and all of these issues created uncertainty. And now, as you alluded to it at the beginning of the show, they're coming up with some new ideas. So there are a whole bunch of new ideas that are flying all over.
Before we get to them, now also the debate is, because now our deficit is, our accumulated debt is closing in on $15 trillion.
Yes.
Might go to,
almost
go to 17.
100% of GDP.
Right. Our annual deficit has been over $1 trillion for 3 years, as high as 1.5. Should we address that, or is now not the time, and should we continue to spend? So before we get to specific proposals, is it an either-or situation?
I think in the short term, we cannot really believe, I mean, if you ask any economist, that you could address the deficit by reducing only spending and not to see any side effect. Sure, deficit is the problem, debt is the problem, we have to address it, otherwise we're going to be with like some of those European countries. But should we take measures and actions that solves the problem, let's say next year? Or should we formulate a decent, viable program that addresses the question once the economy is on clear path of recovery? We believe this is not the time to reduce spending significantly, and it's not the right time to increase taxes significantly. You have to basically let the economy go through its course. As the economy improves, I think we should come up with a plan, don't take me wrong. We should come up with something viable that addresses both issues, but when it starts kicking in, I don't think it can be this year or next year. And I think the politicians in general agree in that principle.
The quorum says we should start with the president's plan, and you hit on a couple of things, some you agree with, some you don't. Here's one you agree with, I think, and almost bipartisan support for this, that the U.S. needs to grow its trade, grow exports.
Yes.
Not universal, because we've lost a lot of jobs in
Yes.
some trade, in manufactured
Yes.
goods trade. So there's some pending trade deals. They're not with big countries. I think one was Colombia, South Korea.
Doesn't matter.
And they've been
Yeah.
sitting around.
Yeah, doesn't matter. They have to move on. I mean, I don't know why they're sitting on it. Is this, again, partisan issue, or
Well,
there's
you
some
look at polls,
economic
and
reason?
50% of Americans don't think trade has helped the U.S. Only 20% do.
No, but look at again.
Panama,
this
South
is,
Korea,
This is,
Colombia.
I think, is a false understanding on part of whoever is passing these things out. Look at our economy is maturing. Our consumers are basically facing a horrible balance sheet. Their debt is too high. They have to save. Who are the spenders? The spenders are outside the U.S.
Right.
The spenders are in China, in Malaysia, in Indonesia, Singapore. They're in Brazil. They're in Argentina. They're in Korea. They're even, Canada. They're the spenders. So what we have to do now, for the first time in our history, we have to be able to be net sellers and buyers. And we have to take advantage of those growing economy to lift us up. So anything we can do that we can sell more products to these countries, it would be helpful. It's going to create jobs. Now, of course, one would argue, yes, we open up the trade, our companies are getting good deal, good markets, and then they produce it somewhere else and sell it. Sure, there would be some of that, but nonetheless, the net, it would be a positive impact for us. And this is what we really have to count on, export, because consumer spending, don't count on it to go 5, 6, 7 percentage point increases as it did in previous cycle, because everybody is tight, everybody has to repair their balance sheet.
And they're hungry in some of these markets
Yes.
for our goods.
Yes.
The Independent Task Force on U.S. Trade says, for the first time, we need to lure foreign investment to do this. Focus on bigger markets. The countries I mentioned, they're not biggest countries. And then we have to, at the same time, because people will lose jobs in certain industries, reform aid for displaced workers so they get skills that are current.
Yes, this is one of our major problems when you look at the unemployment. Part of the reason that it's stubbornly high is because there has been a structural shift. Usually we get some structural shift
Right.
after every cycle that we go through.
But then those same companies come back and industries come back.
Exactly. But right now, if you look at the construction sector, we lost massive number of jobs there, and unfortunately those skills are not needed. So what options do you have? If you want to spend money in form of a stimulus, you do it on construction. You do it by building bridge and roads and hire these people, if you want to do it, again. And secondly, you have to somehow provide opportunity for these people to retool. Otherwise, the long-term unemployment is going to become a serious problem for us.
Okay, another part of the Obama plan that you like, this infrastructure fund. All right, another 50% payroll tax cut, including employers this time. You like that?
Yeah, okay, let's pause there. The package, the previous package we mentioned, $787 billion. This package is almost $450 billion.
Right.
Infrastructure is one component of it, but what percent again? It's roughly about 20% of the
Right.
package.
90
I don't like that. If you give it to me, the 450, if we want to do it, we should do it all on infrastructure. However, you know how the politics work. the politics, the way it works, that they want to please their constituencies. So what they figured, to get the Republican on board, we should give employers a little bit of a tax break on social securities. But
and a job hiring credit.
Yeah, but what is it going to do? I mean, look at it this way. It's going to benefit those companies that they were going to hire workers anyway. How are you going to distinguish?
The giveaway.
How are you going to distinguish that the firm hired this person just because of the credit, or they were going to hire somebody and hired and got the money?
I think it was the late 70s. Some companies laid off workers and rehired them.
There are lots of gimmicks coming, and then there's some money to a state and locals.
We have to touch on it because part of his plan, I know it's not part of the stimulus, but in his deficit reduction plan, $1.5 trillion in new taxes.
Well, that's a larger issue here. Again, the 450 is what we should do, according to the president, to stimulate the economy.
Long-term health
but long-term, as we mentioned, we have to address the deficit and debt. Now, how can you reduce the deficit? Can you achieve all of it through a spending cut? I mean, you just mentioned what? Our deficit is 1.2 trillion. It's been over 1 trillion for 3 years. Can we really reduce that just via cut in spending? If anybody believes that, show me a plan.
So is this the best way to do it? Even
No,
though they
you
make
have
up,
to. You have
more
to
symbolic.
somehow. You have to address the revenue or tax side. You can't just do it.
But you'd rather see fundamental tax reform.
Exactly. But what
maybe
we should
even a national sales tax.
If you give up income tax. I mean, these are the type of things that we have to address.
So
Getting rid of loopholes, bringing the rates down for everybody, but get rid of some of these deductions that exist.
This plan to get all the companies to repatriate the several trillions that they have sitting offshore, give them a tax holiday to at least bring that money. It's all these companies headquartered in Switzerland.
Yeah, but that we have to, again, address that issue on a fundamental basis. Give them a tax holiday for 1 year. Okay, they bring it in. What do they do next year? Whatever they make, they keep it there. We have to address that.
Give them a write-off on capital investment.
Somehow, I hate these write-offs. You know.
Well, what would you do?
I would let them just don't pay any taxes with whatever money they make there.
Okay.
Like very many countries are doing it. See, you doing these short-term fixes, credit for investment, 100% for 1 year. Sure, 1 year it gives you a boost, but it's borrowing from the future. So I like to address, again, going back, we need to cut some spending, but we have to address the tax issue. And this belief that politicians, they say one or another or nothing, I think it's a big mistake.
And all the stuff you mentioned that we've tried already, and now in a little what we might try, we're really very little specific to housing.
Yes.
Now, are we overstating how important, and we know housing's in the doldrums. We're not building new homes, 500, 600,000. It's nothing.
Yes.
Should be building twice, 3 times that.
Yes.
And home values are going down.
Yes.
Are we should be doing? Would you say we should be doing something,
I don't
wait
think
it
so.
out?
I don't think so. Not anymore.
Case-Shiller predicts over the next 4 years, homes are going to go up 1%. Who wants to buy a home when they're only going to get 1%?
Oh, you buy a home not for investment.
Well, that's a different
the problem.
mind. People don't see it that
and
way.
now everybody is shying away and buying home. I mean, they're renting rather than buying. But believe me, down the road, rents are going to skyrocket. And then
$7 trillion lost in home equity.
Of course, it's a bad cycle. But what I'm trying to say is, there are a whole bunch of plans. Mr. Clinton actually came up with some plans.
He says you got to write down mortgages.
Write down principles.
You like that?
No.
Moral hazard.
Why don't they write down my mortgage?
That's the biggest problem with
it.
it. Well, it's not quite the giveaway. So say you're 150,000 underwater.
Yes.
And say you split the difference with the bank, you get a 10-year zero-interest loan.
Yes.
And if you pay it for 10 years, the bank will eat half of it and then fold that, say that 75 grand into your.
But why?
Because. Otherwise, foreclosures will continue.
What would be the difference between somebody who lost his house last year, versus somebody who's going to benefit from this program now? Don't you think there's something wrong here?
They say otherwise we're at 6-7 years till we work through all these foreclosures.
Sure, but see, all of these things are a Band-Aid to a big, serious wound. And the only way you can fix this thing is you need to give antibiotic, wait, and the wound eventually is going to heal. There would be a bunch of losers, and I don't want to sound like so cold-hearted economist. Let it go. Housing, I think we've done enough to save housing market. And in very many cases, you have to pick up a winner. Okay, this guy gets this guy doesn't get this. I think we have to let the system actually Actually, one thing that I do not like with these proposals, there's another one, by the way, out there, that they want Fannie and Freddie wants to refinance those people who are underwater but they're current on their payment.
Right.
Again, if you don't have a loan with Fannie and Freddie, you would say, why not me? I mean, I have the same situation. I'm underwater. I'm making my payments.
Give them a deal they couldn't otherwise qualify
You see,
for.
the problem is you're creating moral hazard. You pick up
Speaking
winners.
Speaking of picking winners, you know, the government, part of the stimulus money has been going to industries like energy.
Yes.
There's one very celebrated misstep with the solar panel company.
Yeah.
Is that something you think the government shouldn't be involved in? Even though anyone thinks energy and infrastructure, again, that's good long-term investment, but should the government be involved?
No. I mean, I personally think you're not going to subsidize a particular industry. What you should do, again, if a broad base, reduction in taxes, reduction in regulations, zoning, making the tax system simpler and fair, I think that would help every business. Bring down corporate taxes lower is 35%.
But some the government has to lead, right? If we want to rebuild our transportation infrastructure
yes.
and the power grid, a lot of people think we should do.
Yes.
I mean, the government's got to lead on that, right?
Well, then use that as stimulus money, the $450 that is going to go to what?
How about
to
paying
employers.
for it with, say, user fees?
User fees are the best solution.
You're
I mean,
fine with that.
for
So
some
if
of
we
our
rebuild
audience,
the ports, you
sure.
increase a fee on the
Sure, some of our audience are familiar with the toll roads. That's the whole idea. You know,
Right.
you go on a toll road and you pay a fee, and a private sector picks up the tab, and that's efficient system to do it. See, most of us, unfortunately, especially public servants, they want a quick result. Give subsidy here, give tax credits here, do this, do that. And all of these create inefficiencies in a way that money, capital, is going after these things with a little bit of a subsidy and tax credit, and it's not efficiently used to address the fundamental problems. I think government has to get out of this business. The best they can do, lower corporate taxes, right? Get rid of loopholes. I agree there. Lower individual taxes, get rid of loophole. Even come up with the simpler one, 3 tax bracket, 10%, 15%, 20%, but no deduction. And if they do that, everybody knows how the game is played. And rather than just maximizing return off of the tax deduction, they can do efficient investment and create jobs. This is what we have to do. Unfortunately, you know, our again, politicians, short-term solution, and they want to serve their constituencies. And that's why we're going wrong.
We barely scratched the surface. As always, love your insight. In a couple of weeks, you'll be putting out, you and Jim Doty, the 34th Annual Economic Forecast.
Hopefully we have a better news.
I hope so. We look forward to that. When we get back, we'll completely switch gears. Annual Miss City of Orange pageant. We'll take a look. Our terrific TV students put together a neat feature for you. Stay with us on the Chapman Business Report. Welcome back to the Chapman Business Report. It's that time again for our great student feature stories. Every year in the city of Orange, they hold a Miss City of Orange pageant. Not every city has one. This one does. Here's a look at the 2011 edition with some of our terrific TV students, Dan Duran, Ruth Paul, Mark Liu. Take a look at the pageant.
7 women strut their stuff on stage to compete for the Miss City of Orange 2012 crown. This year's winner,
Megan Whistler.
Hit me yet. I think maybe tomorrow it'll hit me. All these girls are amazing, and so it honestly could have been anybody. All these girls are so talented and intelligent, and I think any girl could be it, and I'm just very blessed. And I just hope that I can make City of Orange really proud.
The contestants were judged on swimsuit, evening gown, on-stage question, and a talent performance.
There were several ladies here tonight that were just definitely deserving, but I'm very glad the crown went on her head.
Whistler gets a $2,000 scholarship to Chapman University, where she is a senior majoring in communications and music.
I was just hoping for the best. I mean, I put my best foot forward. I did the best that I could do, that I was capable of doing, and I'm just overwhelmed that it came through, and so I'm very excited.
Katie Barnum, the winner of last year's pageant, gave some advice to her successor.
Live it up, take every opportunity that comes your way. It truly is an amazing city to represent, and it really is incredible people. And so just do as much as you can and enjoy your year.
Megan will be moving on to the Miss California pageant in June. For Chapman News, I'm Kim Ewan.
Our thanks to the gang for that report, and congratulations to Megan Whistler, 2011 or 2012, I guess, Miss City of Orange, and outgoing Miss City of Orange, Katie Barnum. Really did a great job. To Jeff Cole Productions, Chapman class of 2001, and his crew for putting on the Chapman Report. They do everything. They make us look as good as they can. Our thanks to them and the boss, the economist Essie Adibi, for always his great analysis on all these ideas out there to try and get the U.S. and international economy going at a better rate. I'm Pete Weitzner. We will see you next week on the Chapman Business Report.
Funding for this program was provided by Chapman University.